The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, so come on back here to the Diagnostic Trading Hour. And I'm your host, Darrell Martin, right here on TFNN.com. Make sure you check us out online. Check out Tiger TV. Also, go on over TFNN.mobi on your mobile phone, and you can listen to us each and every day. 9 hours of live trader commentary, different traders, different views, different perspectives, different markets. And let's check out where the markets are trading at right about now. So I'm going in and pulling up a few things, but I've had some decent moves on the market this morning, and I want to go into next week a little bit. Obviously, tomorrow we got a holiday. Most of the markets you don't even want to be trying to touch tomorrow. The few that are open, just not enough liquidity to make it worth it. Okay, Nadex will be closed effective at 5 today, or maybe even 4:15. I think 4:15 expiration today. And then they'll open back up on Sunday, normal trading hours there. Looking at the markets and where they are right now, we got the S&Ps up 7 points. We have the Russell up 9.5. We have the Nasdaq up 30. Dow's currently up 27 points. Copper is pretty flat on the day. We got gold is, maybe I was wrong on that. Copper's up about a 0.75%. It's just so weird looking at it because the way it quotes. We got gold is down about 0.75%. Silver's down about 1/3%. Natural gas flying up 4% on the day. Champion of the day there. We got oil pretty flat, up 6 cents on the day at the moment. And we got corn is down $3. Soybeans is down about 6. Euro dollar up 7. Aussie dollar down 38. Pound dollar up 9. Dollar franc is up 2. Dollar CAD currently down 9 pips. Dollar yen is, we had dollar yen, we're up 14 pips. Aussie yen down 31. Euro yen up 31. Pound yen up 31. And euro pound is up 1 pip on the day. And then I'll get you caught up on the current market commentary, checking out where everything is located. Let's go ahead and do a quick news analysis and see what we got on the roster, what we had, what we have, where everything's sitting at, okay? And I'm going to pull up a few things on my other screen, and then I'll open up. CAD's really been our main mover here, or main, not mover, but news trade pair this week. So we can go ahead and pull up a dollar CAD chart, and we'll look at it. Oh, that's my diagnostic bars. That's going to take a little longer. Okay, let me go grab a easy chart. Okay, just time-based, simple. It may be up there pretty quick, but still time-based, a little bit easier to discuss on air. And so we'll go with 4 minutes, get a simple template, and we'll open that on up. Okay, so while I'm loading that up and getting those two charts on the screen, we'll also go ahead and I can pull them up, I guess, on this one right here. There we go. Okay. And yeah, I just want to grab time-based, a little bit easier to look at. Once that chart opens up there, sorry, one more chart, and then we're good. All right. Well, here's my diagnostic biased one, and let's look at the market today. We had the core CPI come on out, and based on the core CPI, how can we trade it? What's the best way to trade it? I talked about that yesterday, and we also talked about the interest rates the day before, and putting together these trades, like how much volatility are we really expecting on a given day, just with the week that it is, and with the announcement, and how often that, how far that trade moves whenever that announcement comes out. So we had core CPI this morning at 8:30. We still got a couple hours left to go, but pretty much nothing has happened, which was the expectation. And you can see, these are 10-tick bars right here, and just nothing's going on since 8:30. So if I go and just measure my high to low since 8:30 over here, we're at the high right now, and the low can take you down to about this. We got about 27 ticks. So, and that's high to low. If we go from release right now, I'll draw my diagnostic bars on there. We go from release 8:30, pretty much right here, to high. It was about 21 up. The expectation today on the CAD Core CPI announcement when it came out was for it to move about 40 to 50 pips at most. It's broken 50 pips 2 times in the past 12 months. So if you could hop on this morning, put on a 3 o'clock for somewhere between $40 to $50 max profit, iron condor. So you buy a spread and you sell a spread, and the max profit of the two combined equals $40 to $50. Then you got a great trade, because I think we'd have to move 100 pips against you for you to lose, which is very, very unlikely. Holiday, basically a Friday, okay, and just on this news announcement itself, beginning in the day. We can do the same thing. We can go back and we can look. Let's check out the interest rate, because they released their interest rate yesterday, and see what kind of volatility did we get on the trade. What was the expectation? Okay, the expectation was that it would stay somewhere between 50 and 60 pips. 3 times in the past 12 months, it's actually broken out of 60 pips. So if we could get $50 to $60, we're solid. And so let's go over. Let's look at it. Well, 8:30 yesterday. Let's see here. Measure this. That puts us right here. Okay. And then we take this all the way to our high before 3 o'clock. So that's a decent little move. Okay, so we got 58 pips. All right, so we didn't quite break that 60. Where do we get on that to the actual close? So we're going to take this over to 3 o'clock. So right about here. Okay? And that's going to put us at about 40 pips. So if you got 50 to 60, you made like $10 on the trade yesterday. Okay, if you went all the way out to 3 p.m. Not a massive profit, but again, if you got 50 on the trade, it had to move 100 pips against you for a 1-to-1 loss. It had to move 50 before you even started losing $1. So, you're talking a 20% return right there on what you're going for, okay? Return on, basically profit, like, risk reward. Now, if we go over here, we can also go, what if I would have chose 10? What if I would have chose 11? Because you can tighten the trade up. We only had about a 14 pip move on the 10 o'clock. If we go, we measure from the 11 o'clock. We measure that one out. We got some movement there, going into 11. Got about 46 pips on that one. So, really, I think one of the things I noted was, I talked about on the air, I was like, if you're going to choose the 11, you might as well choose the 3. Because you usually don't get that much more movement between 11 and 3. Maybe it pops up 5 or 10 ticks, but it usually comes back anyway. And either you want that 10 o'clock if you can get the premium, or you want that 3 o'clock if you can't. Because the 11 o'clock really doesn't give you enough premium to be worth the time. And so I'd rather have the 3 o'clock over the 10, or the 11 any day. And then, if you can find the 10 o'clock, awesome. But usually that's not going to be enough premium on that trade for the 10 o'clock expiration. But those were 2 news announcements. There wasn't just a whole lot this week. We did have the Google trade from yesterday. Worked out pretty well if you were layering in. Worked out well if you got out when it would hit. I want to say we were going for 50, and it got up to like 45, 47, 48, 48, 48, 47, 45, 47, 48, 48, and didn't hit 50. So if you adjusted your order at all by a couple dollars, because you're like, screw it, I've been waiting for 10 minutes for this thing to fill, and it's $2 to $3 away, as a trader, that's something you want to learn to do. If it's just sitting right at your take profit for a long period of time, you need to take profit. Okay? So if you would have done that, you would have been fine. It would have hedged you off, okay? Because you made you made enough to cover all the other sides of the trade, even the additional layer. You could have layered in some additional trades along the way, depending upon what kind of size you were doing. I know that gets a lot more difficult depending upon account size. But, I mean, it was literally like $2 to $3 off being able to hit your take profit because there was so much implied volatility in there. It really inflated it quite a bit. I had traders email me and Skype me and everything else yesterday saying, hey, they made money on it. I had traders saying, hey, they lost money on it. The ones who made money on it took profit. It was a couple bucks away, or they layered in. The ones who didn't take profit, didn't layer in. So it's just a matter of learning how to do those strategies. And that's why I always encourage people to demo trade these and learn different ways to do it. And, I mean, we've been doing it for a long time. We've been, profitable quarter after quarter after quarter after quarter. Eventually, one of them's going to lose. So, on those Google straddles, or strangles there on the binaries. And so yesterday, like I said, you could have been profitable to spin spawn if you had the experience to adjust, or if you took profit or you just left it on, or what price you got in at. I mean, there's a lot of little variables there, but that was either it's probably either a loss or a nice win or a small win for you. Usually it's a lot cleaner than that. Usually, either you won or you lost. So that was our big trade there. As far as earnings releases this morning, looks like Dow Jones was on had General Electric release. What do we got going on for next week? What's on the roster? Okay, Monday, really nothing. Everybody's getting back in gear. Tuesday, we're going to have AT&T is going to be announcing Tuesday. They're in the Dow, and they'll be announcing their earnings in the morning before the market opens. Maybe after market. We actually don't have a confirmed time at this point. Okay? So, all right, so that's sometime Tuesday. And we need to see if we can narrow that one down. But and then let's see, what else do we got? We have Comcast is going to be releasing. They're in the Nasdaq. They're a large part of the Nasdaq. They'll be 7 a.m. Okay. And let's see. Also on Tuesday, we're going to have McDonald's. Mickey D is going to be announcing 8 a.m. So, and they are in the Dow. So, going to have some movers and shakers Tuesday morning. Okay. And then let's see. What else do we got? Gilead. Will be coming out as well after the market closes. Trying to figure out on these earnings here. Okay, so we got that one. All right, and we got a few more earnings. So that so Gilead will be coming out on Tuesday after the market close. I'll go through the other major earnings coming out next week right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. And so we're going through each one of the news announcements. Now we're talking about the different earnings releases that are coming out in the upcoming week. So you just can get them on your calendar. Make sure you have them, okay? Be ready for the week. Don't let it take you by surprise. And earnings is an interesting time to trade, okay? It can cause some weird volatility in all the markets, which can be great or can be challenging. You never know which. So that's why you want to have contrarian. You want to have scalping. You want to have, trend trades, all of them going for you. And so, so let's check out what do we got on the 23rd. We're going to have Procter & Gamble. It's coming on out. They're going to be releasing their wire release at 7 a.m. So I'm not giving you the press conference times. I'm giving you the wire times, okay, if I have them. 7:30, the Boeing. What does the wire mean, by the way? The wire means when the news is, they'll release on the wire, on the news wire, and they'll put all the information out. Then all the analysts can pick it up. They can analyze it. Obviously, that's usually what moves the market the most. And then there'll be some more movement after the press conference. But that goes out. All the analysts can analyze it, and then they hop on. They have a press conference and investor conference, and they can come on. They can ask all their questions. So that wire comes out before the press conference, which is usually what you see on the website, on the pages, on your trading platform. You see the time of the conference call. You don't necessarily see the time of the actual release, okay? Let's see. So Boeing, 7:30 a.m. is coming out that same day there on the 23rd. Let's see here. And then what do we got on this one? We got... Okay, this one's going to be, I think, after the bell here. All right, so we're going to have a 4 o'clock. Might be a little earlier than normal due to the time of the conference call. Qualcomm and the Nasdaq will be releasing. So that might come out a little bit earlier due to the conference call time at 4 o'clock. Let's see, Apple. Now, Apple comes out after the bell. I wish it didn't. I wish it came out before because we would totally trade it. But after the bell, Apple comes on out at 4:35. It's usually when that release happens, and then sometime after that, they have their conference call. It's obviously a very heavy mover in the Nasdaq. Be careful about having anything right then when that comes out. Let's see. Let's go on into the 24th. So that's the big earnings review for next week. We have Verizon. Verizon's going to come out. VZ there, 725, and is set for the 24th. So early in the morning. Let's see. Amazon is coming out at 4 o'clock on next Thursday there. So that's actually a pretty good mover, usually as well. Sometimes we get Amazon and we get Google at the same time. Love it when that happens. But it can be good and bad, though. If one's great, one's bad, it could sort of offset itself. But if they're both good or both bad, it explodes one way or the other. But anyway, so 4 o'clock on Thursday, we're going to have Amazon. And let's see if we have Visa as well. That's in the Dow. And that'll be coming out about 4 o'clock. So stock hadn't been out just a long time, but about 4 o'clock is when the release is scheduled on that one for the wire. And then Microsoft will also be coming out on Thursday. So we're going to have Amazon and Microsoft. So that's going to be and Microsoft is in the Dow and in the Nasdaq. So, which last time I checked, 4:10 p.m. Is when it'll be released. Okay, so that'll definitely, Nasdaq and Dow should have some good movement next week at the end of the close on Thursday. Don't see any major ag reports. We are going to have natural gas storage next week. We're going to have oil inventory next week. Oil inventory is always at 10:30 on Wednesdays, unless there's a holiday, like at the first of the week, like on a Monday or Tuesday. And then natural gas is on Thursdays at 10 a.m. 10:30, sorry. And then we got the unemployment claims. That'll come out at about 8:30 on Thursdays. Crop progress reports, crop bulletins happening pretty much every day of the week, but after the close, not much you can do with them or about them. And that wraps up the stock news and wraps up your metals and not your metals, but your energies. Let's see what else we have on the roster for next week that we want to be aware of. Today is a holiday, by the way, in New Zealand and Australia. So basically, they're already on Good Friday. Today is their Friday, so that affects their currency pairs a little bit. And then, of course, tomorrow, everything will have holidays. All right, stay there. We'll be back right after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. We got a caller on the line from Costa Rica. So how's it going, man?
Fine, thank you. We've got a little kind of a holiday here with the folks, and the buses are not running as much. So if you hear a loud sound in the background, it's just a bus whizzing by.
They're just flying by. They're not taking their time, huh?
Yeah. It's, really.
So you enjoying the holiday? So you relaxing a little bit?
Yes, I am. Thank you. I hope you are too.
Yeah, definitely. Awesome. So what you got going on? Are you calling in about Google?
Yeah, here's what I want to talk to you about. I listened to your archive show last night, and I wish I would have heard your show live, but I screwed up. I made money, but I tell you, I bought in the extended hour 400 shares of the Google at $5.23. And, you know, I got sort of willy-nilly nervous, and I didn't think about holding too much, and I ended up selling it before it took off. In your conversation about, you know, your spreads, it's got a this way, it's got 25 points up, it's got 25 points down in the option and whatnot. You can't play the option, you can't sell the option in after hours, so how you know, like this next week is Apple. I'm going to be listening intently how you look at Apple, because this thing dropped right in the area that you said it would drop. But I didn't hear it. I just estimated my own, I was lucky, but I sure wasn't lucky when I could have made 25 points on the upside. Just, if I would have just held on a little longer. But I don't like to be thinking greedy. That's not good. Anyway.
Right. Yeah. Well, yeah. I mean, you don't want to try to maximize. I mean, really, if you can go for the middle third to 2/3 of a trade, that's what you're usually going for on a trend. But obviously, the more the merrier. We all like we all would like as much as that we can get. But yeah, I mean, it did its normal thing. It ran up about 25 points, and then it dropped on. It literally gave it all back. They got spurious quotes right here where just random stuff was flying out there. But then it popped on back up. Had a nice run back up. You're right. You can't do the options in the after hours. You can do NASDAQ, though. You can do that up to 415. Okay? You can do NQ. You can do US Tech 100 spreads over on Nadex. You can do binaries on Nadex. You can do, like I said, NASDAQ E-mini options as well. And it's amazing how well in tandem they run together, especially like whenever Google's earnings are coming out or Apple's earnings are coming out. And the best way to see it is to go. Yes.
Let me ask you this though. With my mind's moving too fast to recall everything you said, but you basically, we closed at 557 yesterday, or where, I don't know. I don't remember exactly where we closed on Google, but 25 to 35 points down in that range. So I took the 35 points down. That's how I got that low, 522 price. Again, though, I should have figured there should have been a bounce, but I didn't see the bounce that really must have been a news conference call that did it. Do you see that kind of activity possibly with Apple happening, whether it's upward or downward?
Oh yeah, I mean I'll go through when I do Apple, I'll go through and I'll look at how much it's moved and NASDAQ has moved. Like what I did on the show yesterday, as I went through and I looked at Google and I looked at NASDAQ, we looked at the last, just 4 releases. And just showed what was the average move. I mean, we were looking at, basically about 20 to 24 points. So we were expecting on both of them, NASDAQ and Google. And so, you can trade the stock after hours. You can't trade the options after hours, but you can trade NASDAQ options after hours. Okay, in the sense of like the last 15 minutes. So you can hedge off with that. You can trade that. You can trade it with limited risk. Less than 25 points of risk, definitely. So that's the scary thing on Google is, you have 25 points of risk if you go in and trade Google, because, maybe it flies up 25 or down 25. It may do 100. There have been some insane days. But, you don't have capped risk when you're trading the stock, and you're putting up a crap load of additional money. Whereas you can go in and you can cap that risk and still get that profit with an option versus you're not going to be able to do that with the stock.
Darrell, could you look at a Google 1 minute chart, and do you have the RS Wilder or the MACDs? Because on my closing RSI Wilder yesterday, I'm just looking at the history, and I saw it too, and I thought, this just seems like people are expecting they're going to be hitting the home run with Google announcing something fantastic, so 557 will go up another 30 points. But the RSI Wilder was in the red zone, just looking to dump, looking to come back down to earth.
Oh, yeah, the RSI definitely said go short right before the market. I closed. Right before the... right before the cash closed, the RSI said go short. Yeah.
But, the question I have, though, is can you really trust that? Because the RSI Wilder was in the red zone on the high side. It could have gone on for, with good news, much, much higher. And who knows? Or in your experience, this is a question I have for you. In your experience with the MACD or the RSI Wilders, and when they're in the high numbers or in the very bottom numbers, underneath, have you seen it actually be a foretell of, okay, must be somebody knows something and they're setting people up or anything like that?
Well, my summary on indicators is all indicators are based on past price movement. So they're not going to foretell anything. They're only showing you what has happened. The closest thing, what an indicator basically takes what has happened and the whole purpose of it is not to foretell, it's to clean up what has happened, to give you an idea of where you're at in relation to something. I use price action and volume and expectancy. As far as RSI, if I'm looking at that, I do like RSI. That's one of the indicators that I actually do like having up on my screen. And it depends on what settings you're using and everything else. But the way that I put it up there, I'm going to look at it. I have to see it not only break, but I have to see it pull back towards the mean. You have to see it like coming back on down. And one of the traders I work with, he actually taught me one of these settings. He uses 5 and 1 on it. Works really well. And but I got to see the price action going with it, and I got to see the volume going with it. So I don't just get in just because the thing went up and hit a high, because it can go higher and higher and higher. And I don't go short just because the RSI starts going down. I want to see volume confirming that, and I'm going to use a tight stop, a really tight stop. So if I'm going to trade RSI. So I see RSI more as like, hey, okay, cool, that says what I think is going to happen. Not, what does RSI tell me? Like, it's a confirming indicator. It's not a filter. It's not a signal. It's just a confirmation. That's really how I use it, as a confirming indicator. It can be a, hey, pay attention. But I mean, I'm using ranges, expectancy ranges. Of how far I expect the market to move on any given hour, So like right here, this is how far I expected the market to move on this hour. I'm in the zone. Okay, I do expect a pullback. Well, I mean, that's a nice, solid, easy, like, few dollars. Grab it, boom, done. And I'll do that over and over and over again. So looking for, we had a really quiet morning too. I mean, that was an interesting morning. Usually we get a big move in the morning on Google. But I use expectancies because that's a lot more accurate than using anything else. And then I'll use volume expectancy, and then I use simple price action. Like breaking highs and lows.
Do you think you could measure if there was a lot of volume in the after hour that I
have the measurement right here of all the after hours. I guess right on the screen, what I'm looking at is I'm looking at the average after hour. Like, this is the average volume. This orange line you're seeing, okay? And the blue line is how much volume we actually had.
Okay, meaning we were under normal. We were less than normal volume in after hours. Is that what I think I see?
The opposite. So the orange line is the expected. The blue line is the actual. So like we had massive volume. Like this line up, they were this was being driven up. Okay, this is much more volume than normal, and then it was a massive sell-off, and then all of a sudden the volume dried up, and it started like just dropping really quick, and they were done. And this morning, or later, you get more after-hours trading. They're starting to push it back up a little bit, and you have to have access to all the after-hours data, but I mean it's going. And then finally, this morning, it opens back up. They pop it back up, and then we see, here's the day played out.
Yeah.
On Google today. And see, normally we're not exceeding. Like, we had this mass, then had a sell-off where it dropped right back down. So this morning, we got basically pulled back a little over half, about 3/4%. We dropped about another 10 points. And then now it's just rallying back right up to where all the stops were. So the market's always going to go to where the stop orders are. That's what, if you can figure out where a stop loss order is, okay?
Yeah.
Like if you look right here, if you went short here, or if you went short right here,
or if
you went short right here, no matter what time it was, just look more at the thing. If you went short on any of these price levels, okay? It is completely reasonable to expect that you would have a stop loss right there.
Wait.
Because that was that was the last major move in the market.
Are we looking at this morning? Is that what I'm looking at, or after hours?
You're looking at this morning. So this is right above the high of the 944 bar. I have 4-minute bars.
I see it now.
That is a very reasonable expectancy for having a stop loss. Okay? Another reasonable level for having a stop loss is right there. I mean, if I went short, where would I put my stop?
Yeah, where would you see, looking at right now, this looks like a live chart at the moment, more or less. So
it is live. Yeah, you're looking at Google
real
right
time.
now.
Where do you see things right now? If you were to make a game, a bet right now, if you were to make a position, long or short, what do you see? I see more of a take a short side right now.
I'd buy it right now, and I'd get out at 547. Grab a quick $3.
Okay.
I don't see more upside. It's going to go to where the orders are. That's how the market works, period. Like, it doesn't matter what. I mean, get rid of your RSI. Throw that crap off the chart. Figure out where you'd put your stop loss if you went short back here, and the market's going to go to where the orders are. So find those zones. And, I'm not saying it's not going to oscillate as it goes. We'll probably get a couple down bars on the way. But, like, this was the next range, like right here. So when that came down, and then volume started reversing back up, we started exceeding volume again, it starts pushing back up, it's going to hit this stop loss zone right here. So it's very reasonable to expect that traders would have a stop loss right above that high. So when they drive it up, they're going to drive it to that level.
Is that a 4-minute
4-minute chart. Yep.
I'll have to see. I don't know if Thinkorswim does expected volume. That's a new one, man. I learned something new every day.
No, they don't. I wrote it. But they don't have it. But it's the main thing. I'm trying to teach you even more than the expected volume. So that's my indicator. But what I'm trying to teach you is look at where when you think the market's going to turn around. Okay, like let's say you're using RSI. Okay.
Yeah.
And so you see it down here at the 20, and it's going back up. You think it's going to go up. Okay?
Yes, sir, yeah.
Where do you think it's going to go to? And I can tell you where it's going to go to. Every time.
Uh-huh.
It's going to go to where the stop-loss orders are. Because you're going to have all the breakout buy traders are going to be here. All the short traders are going to have stop-losses here. And if I have a big position, if I'm buying 100,000 shares or 200,000 shares or 1 million shares of Google and I want to get rid of it, okay, I need to know where I can get rid of it in like a quick dump, like boom, done. Okay? I got to know where I can pull that off. That's where the stops are. So you want to follow the sharks. You want to be a remora fish, okay? You just want to eat off their scraps. So when your RSI says, hey, it's going up, where is it going up to? It's going to where the last stop orders are. So you know there's going to be a large collection of stop orders right here, just based on just the oscillations of the market, that most recent high.
Teach me
and
something,
so it goes
Darrell.
up, it hits that area. Yeah.
Teach me something, because, I don't have I don't know where the stop losses are, but I don't know where they are.
Where would you put yours? Stay right there. When we come back, I'll tell you how to know that, okay?
Okay.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. the king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, so come on back here to the Diagnostic Trading Hour. And we got Rico on right now. We're going through Google. We're talking about how to know where the stop-loss orders are. You there?
Yes.
Awesome.
Sound check. Can you hear me?
Yeah, you got it. So test 1, 2, 3. You're on. Okay, so you get a long signal, you get a short signal, whatever signal it is that you get, okay? You need to go, where are the stops? There's a couple ways to know that. One of them is to go, if I went short earlier, okay, because you think the market's about to go up, right? Okay? So if I went short along these areas, where would I have placed my stop loss? Myself. So just, where would you have placed your stop loss? So if we go in and we look at these trades, and we just start going forward tick by tick over here, okay? So watching the market right here, all right?
Okay.
And it's going forward, and you go short. Would it be reasonable to think you'd put a stop loss right here? Above this high? You there? Rigo? Okay. I think we lost Rigo, but feel free to call back in.
No, I'm back.
Oh, okay. Is it reasonable to assume that you would have put a stop loss above this high if you went short right there?
Yeah.
Okay. So if you went short here, again, right there it goes up, and then goes back down until you go short on this bar, Is it reasonable to think you'd put a stop loss right there?
Yes,
sir. Would you put a stop above the high?
Yeah, of course. Yes.
Okay, yeah, that's all I'm asking. Is basically, would you put a stop above the high of this bar? If you went short right here.
Yeah.
Yeah. Okay. So you and everybody else. Okay?
See, yeah.
Goes down. It happens again. Right there, and you get a short. You go short again. Would you likely put a stop above the high of this bar?
Yeah.
Is that reasonable to assume that would happen? Okay.
Yeah.
You know that we're all alike, right? We all do the same thing.
Yeah.
Okay? I'm not saying we all enter and exit at the same time, but I'm saying stop losses, we're all pretty good at putting the same ones in. It's magical how we do it, okay? So it's magical how often they get hit, okay? So you go down and you look at it, and you go, okay, I think the market's going to go, it's going down. And I get an extreme RSI over here, and I'm like, okay, I think the market's going up now. I see volume, whatever your clue is, okay?
Okay.
It's going to go up to where the stops are. The market will go to where the orders are because basically, the market ceases to go down because there are no longer enough sellers willing to sell below the market. Okay? There are no buyers down there either. So the buyers are only above the market. So it's not like the market doesn't go up because there's a whole bunch of buyers. It goes up because a lack of people willing to sell lower. Okay? So whoever's been driving the market down, whatever conspiracy, whatever you want to come up with, doesn't matter. What does matter is where are they going to drive it to next? So you think it's going to go up. You use your stop. Now, you probably used your stop down here to begin with. So you probably said, okay, now I'm going to have a stop down here. They're going to drive the market back up to where the orders were. There it goes, right in that order zone. Notice how we get all that volume. It starts oscillating right there. It's going to go up. It's going to come back into that order zone. They're eating all the stop losses before they go back to the next area with stops. And either they're going to go up to here, or they're going to come right back down here where all these stops are.
Thank you.
So hopefully you picked up a couple things. But call me back next week. I'll be glad to explain more to you, okay?
I'll talk to you on the Apple
The
Day.
Technology Insider is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.